What do investors underestimate often? Number one is management. Management is the critical aspect of every single business. It's a qualitative piece of what makes a company run. It's easy to look at the quantitative pieces. A lot of investors love to talk about fundamentals, technicals, or both. It doesn't matter how you look at it. Those are just financials. If you look at the fundamentals, you could see a really good company producing a great amount of cash flow. Maybe you can look at the products or the revenue streams. But the management is the last puzzle piece in every single business and makes an acquisition work and makes an investment profitable. You're relying on the management to steer the company in the right direction, to be competitive, to focus. These are critical elements in every single business. And it really differentiates, one company, company A. Let's talk about some retailers. The big one was J.C. Penney, Ron Johnson, who helped build the Apple retail stores. He failed as the CEO of J.C. Penney. He didn't matter what the fundamentals or technicals said. He was not able to implement or execute a profitable strategy. He was in J.C. Penney from November 2011 to April 2013. The stock price went from 40 to 9. Now it's a bankrupt business model. They're competing with hundreds of other retailers, thousands of them. Sears is another great example. Fantastic money manager came in, tried to run the business, failed, did not work, still failing. It's not turning around. Doesn't matter how good the business was 100 years ago. They invented the catalog online the phone catalog business, but they failed. And sometimes you don't need to look at technical or fundamental indicators. You could just listen and talk to the management team, hear what they have to say. If it's valuable or makes a difference, they will tell you. If they have a really big vision, but they're not talking about the micro steps about how they're going to execute or anything, then they're going to have a lot of trouble implementing a plan over a 2 to 3 year period. Jeff Bezos from Amazon talks about every day he's thinking 3 years out. He's focused on the quarter in 36 months. He's not worried about, every quarterly earning call or what's going to happen in the next 3 months or so. He says that decision has been baked in 5 years ago, 3 years ago. He was already working on the next several years. So you want to focus on management that's thinking out very long term, has a very strong interest in the company, its stakeholders, its customers, clients, and employees, everyone across the board. It's very important to stick to this. It's harder to do this work. It requires more due diligence. It requires talking to people. It requires looking beyond the little paperwork, beyond just reading reports, beyond what people are talking about on the street. It requires you to put in the effort to figure out who is the best manager, who's the next Steve Jobs, who's the next top lieutenant that's really going to run a business, make it very profitable, and make it number one, a market leader, and make money back on your initial investment.